Hello, everyone, and welcome to another episode of the Daily Gwei Drive Thru. I'm your host, Anthony Sassano, and I'm here today with Eric Conner to walk you through all the latest news in the Ethereum ecosystem. Hey, Eric, how you going?
Hey, Anthony. Doing well. I think it's been, 4 weeks or something like that since we did the last one. I've been traveling a bit, but yeah, I should be settling into this every 2 weeks or so now. But yeah, I've been good overall. How about yourself?
Yeah, I've been good. I think a lot has happened actually in the last 4 weeks, crazy enough. Maybe not so much in the market action, but on the regulatory side, there's been a lot of kind of action, and it kind of feels like we hit like a regulatory FUD bottom, right? Like maybe a month or five or 6 weeks ago now, where we have a lot more positive regulatory stuff coming out. There was these recent bills that got passed through the committees. I mean, haven't been passed through the House yet or the Senate, of course, but passed through these kind of like subcommittees and things like that. So there seems to be some real positive kind of bipartisan support of these crypto bills lately, which is really positive to see. But I think people are, they're kind of asking, why is the market not kind of reacting to this? It's like, well, because markets can lag for a long time, and people are also saying, well, the stock market is hitting all-time highs or going towards all-time highs, and why is crypto still lagging? It's like, because it does, right? It's a riskier market. The information asymmetry is pretty bad generally, and I think that people need to realize that these things take time to catch up. But yeah, I mean, have you kept up with all the regulatory stuff over the, I guess, last month?
Yeah, I have been. Yeah, I guess last time we talked, I think ETH was about the same price as it is now, but we dipped all the way to like 1600, all the way up to like above 2000. Now we're back at this like we're stuck forever apparently at like 1870, 1880, whatever this weird number is that we're attracted to. Yeah, I have. So I guess the dip was originally because of like the SEC lawsuits against Binance and Coinbase and everyone kind of like fearing that. And they were like, the SEC claimed, this list of coins were securities in their lawsuit, which of course they're going to do because that's the SEC and they're trying to, do a bit of a power grab on crypto. That doesn't mean they are securities, but the market's still kind of panicked, right? And then
Hmm.
we started, we came back from that a little bit, and then we started pumping when XRP, Ripple of all things, kind of had a win in court against the SEC and was called not a security. And there's some nuances to that, I'm not a lawyer. I can't really go into too much, but I don't think that legal battle's over. I know the SEC can appeal and all this stuff, but then we kind of shot back up. So yeah, I mean, I think the market's a little exhausted probably right now just from this like up and down regulatory yo-yo. And I agree, like usually when that happens, like to me, we've bottomed in the bear cycle, right? Now there's always that weird window between like bear and bull, where you just kind of sit there and like you and I call them crab markets, right? You're just kind of like crabbing left and right on the
Hmm.
graph.
Hmm.
And, unless you're on high leverage, getting chopped out, I mean, you can just kind of chill, right? I mean, I think I still stand by, since we've started doing these again, I've been saying I think the bull market's brewing, right? It's about to start. And the biggest is the macro environment, right? Like inflation's down, much lower than it has been. The Fed's still raising rates a little bit, but it seems like they're going to be stopping pretty soon around this level. The NASDAQ, S&P 500 are near all-time highs. And I think what you said, the most important thing is realizing that crypto is risk on, and usually there's a waterfall effect, right? So if we watch stocks break like all-time highs, people start feeling good, they've got extra money, they go look for more risk, they go look for more multiples, and crypto usually is the benefactor of that. Like if you look at past cycles, like usually crypto lags stocks a bit on the up and then blows by it percentage wise. So I think we're just in that bit of a waiting game, and this is where people get chopped out, you get impatient, and we're kind of flushing those last people out, in my opinion. But yeah, don't be fooled. Like if stocks break all time high and the macro environment looks good, crypto's going up. There's just no other way around it.
Yeah, I think the chopped up aspect is pretty important because I put out a tweet where I basically said people are going to fumble the bag now. You've been holding crypto and then you're looking at stocks and you're like, wow, okay, I'm holding this crypto. It's not really doing anything, but stocks are going up. So they sell their crypto and go buy stocks, but they do it at like the worst time, right? Because as you said, like you chop up these last kind of people and then we go up and then they kind of just like end up trading in and out of things like constantly. So, and it causes them to lose and get, as you said, chopped up. But the Ripple thing, I actually completely forgot that happened between our last episodes, and it was such big news because, like, I think for a lot of people in crypto, they're not huge fans of Ripple and XRP, but they're less huge fans of the SEC. So it was kind of like rooting for Ripple to win that case because we don't want the SEC to win. And I think overall, the win is good for all of crypto, really. And as you said, there can be appeals and stuff like that. But from my reading of it, it really does seem like the SEC does not have very much left to stand on there. And obviously, it plays into their other cases, as you said, against Coinbase and Binance, and people are pricing that in as well. I think Coinbase stock is up quite a lot because people are basically saying, well, if the SEC can't even beat Ripple, how are they going to? And they can't even classify XRP as a security. How are they going to classify all these other things as security in order to win their cases against Coinbase and Binance? Binance is a bit separate because they've got other charges against them as well, not just the securities trading things. So yeah, there was a lot of positive, I guess, reaction to that. But at the same time, as we're talking about the kind of prices and what they do, it obviously shot up. Like there was a huge pump after that win, especially on XRP. I mean, XRP went up ridiculous amounts within 24 hours for a cap of its size, right? For a market cap of its size. And then all the other coins followed, the ones that had been beaten down because they were listed in the lawsuits against Coinbase and Binance. But as you said, we came back down, right? And then we've just been crabbing again. And I think that's got to do with the fact that and I say this all the time, but like there's not any new money still coming in, right? It really is just the same money. It's what we call a PvP market where everyone's just trading against each other. And in that environment, what ends up happening is that there's no follow through. Like pump happens because all the traders are piling in. They're like, oh my God, this is a new narrative. Let's trade this. And then they're all taking profits because they're traders, right? They're not going to just sit in the position and that's why you don't see a follow through because it's just trader money. It's not new money. But when we have net new money come in, as you said, when the stock market hits all time highs and then people start looking for more multiples and want to take on more risk, that's when new money comes in. And obviously the existing players and the traders, they realize this as well because on their charts, they have these lines that they draw and those lines start getting broken. They're like, oh, okay, wow, there's new money coming because there's follow through now. We're actually going up from here. So it all just feeds on itself, right? And it snowballs and it causes a bull market. Same is true for bear markets. It just depends on the trend. And it also takes a lot longer than people would like for trends to change as well. The market needs to be convinced of things. So that's what's kind of happening right now. But yeah, that whole Ripple case, that it's 2.5 years since that case has been going on, is a pretty big win for crypto overall.
Yeah, for sure. It's funny it came at the hands of, Ripple, but it still doesn't really legitimize the project by any means, but it was a general good win for crypto as a whole, right? So I guess we'll take that even though it was Ripple. But yeah, the market's funny right now. I mean, I think right now is a time, prepare a little bit, like get your staking rig set up, stash some ETH away, clean up your addresses, like kind of just do some maintenance on your stuff, right? And kind of prepare. And I would say the number one thing is like, if a bull market's coming, which I think it is, set some, I mean, unless you're still holding all your ETH through this next cycle, set some sell targets, right? And I talked about this like a lot back into the Ether days, like the first big ETH pump, I wasn't prepared. I didn't have any sell targets set and I kind of like missed the top, which is fine, right? And I sold some lower, but I didn't like play that how I wanted to, right? And last cycle I was prepared, right? I had like the percentage of ETH I wanted to sell. I had a plan, I had targets, and like I didn't sell it all at 4,900, but it doesn't matter, right? I was still like hit what I wanted to hit. So it's a good thing because like you very quickly get caught up in the mania, right? Like if we start moving from 2,000 to like 4,000 and people start losing their minds, you forget how fast it can go, right? Like we wait like 3 years in a bear market for a very short amount of time of a bull market. So that's one thing to always kind of think about with an impending bull coming. But it's funny, right? How I posted a chart the other day, the like all-time Bitcoin chart. It literally does align every 4 years. And it also always aligns with the halvening. Now, I don't think like the halvening, like the actual event is the direct impact. It's just that narrative around it, right? And Bitcoiners are great at building that up. And I think that'll kind of it's all self-fulfilling in a way, right? Like they start, the halvening narrative starts, that media kind of starts picking that up, price starts kind of going up, and then retail starts noticing, and then the new money starts coming in, right? And we're just not quite there yet. I think, Ethereum has better narratives with like fee burn and staking live, but retail hasn't caught on to that yet, right? We're going to need like them to come in because of the graphs and then kind of stay for those narratives. Because in all reality, like the only crypto narrative that really translates well right now is like the Bitcoin digital gold narrative. As frustrating as that is, we're still a little while away. I think a lot of people will come in because of the inflation happening across the globe. Like that narrative will start to catch on for ETH. And then people will get interested in like, oh, the fee burn, it could be deflationary. And I can earn 4% if I stake this. But um, it's just funny how these cycles happen. Like I haven't had any random friends or family text me yet. And I always know that's like around the start. And then if I'm getting like multiple a week and they're asking me if they should buy like Cardano, then I know just sell everything.
Yeah, I had a friend last cycle who messaged me only twice, but at the May 2021 top and the November 2021 top. And both times it was about Ponzi's. So I don't know if that's going to work next cycle, but I'm going to be
Please share if he
watching.
texts you this. Yeah.
Yeah, I'll be sharing it for sure because he's been my friend for a long time since basically high school, and I've talked to him about crypto a bunch. But it's kind of funny how he messaged me those two times, and it was basically the top each time. So yeah, maybe he'll be the signal next cycle as well. But you're right generally about those narratives because I think what happens is that say right now you're allocated to stocks or you're in cash and you're thinking when do I deploy into crypto? You're thinking, well, maybe I won't deploy until the halvening gets closer because then the narrative will start getting more heat and then we'll start going up. And then it becomes, as you said, a self-fulfilling prophecy. And I think that maybe it lasts for a little while longer, that kind of halvening narrative. But I think the more sophisticated players we get into the ecosystem, like the actual institutional and TradFi kind of money, not the memes of like 3AC and stuff like that people thought was smart money, but they weren't, right? I'm talking like actual non-crypto native money because these funds that came in, they're crypto native money and they're still influenced by the crypto native narratives. Whereas the kind of like ones that exist outside of it, I think that they're influenced by a bunch of different kind of metrics and things. And also, if they're managing other people's money, they also have to think about things differently and think about risk differently and have their models and everything like that. But I think at least this cycle it seems like the halvening narrative is something people are latching onto again. And as you said, it seems to want to line up anyway, because I mean, regardless of the halvening happening next year or not, I still think next year is going to be a very positive market, just based on a bunch of other kind of things that we've spoken about in the past there. But I guess you mentioned ETH staking as well. It's probably a good way to segue into that. It's been up only, right? It has not stopped. I mean, the queue is still above 80,000. It was above 90,000 for a bit, but it's still above 80,000. And it just doesn't really stop. It hasn't come down that much. And we have newer protocols coming online as well. We had over the past few weeks, Geode finances on testnet. Diva staking was announced. I think they're on testnet or mainnet at this point. And there was also Stakewise V3 opened up their testnet to everyone. So there's more and more products coming online. And also the Golem have this new kind of foundation or something that's spun out of Golem called Octant, which is staking the ETH that Golem has. And then GLM holders can vote to distribute that to like wherever, distribute the rewards from the staked ETH to wherever. So yeah, we have all these kind of activity happening in the Ethereum staking space right now. And it just seems to be happening mostly in the background. People are kind of not paying too much attention to it. I think it's become a stale narrative for people where they're like, yeah, okay, ETH staking, people are staking more ETH. And they're just not realizing that it really has been up only. The restaking stuff has gone crazy. I mean, Eigenlayer, every time they raise their caps, it's just immediately filled. Now, of course, I'm sure that a lot of that has got to do with airdrop farming as well. People think that they put the ETH in, they might get an airdrop one day. But I mean, it's an incentive. At the end of the day, this space runs on incentives. So yeah, all of that just combined together is just making for a very crazy ETH staking ecosystem, coupled with the burn still, going strong, still burning ETH. And it's funny because I saw a tweet yesterday. Someone said, if Ethereum delivered the burn and the merge and ETH BTC is still kind of stuck in this range or not like, going to highs. But I think that's the wrong way of looking at it. If you look at it from a performance from last cycle to this cycle's perspective, ETH BTC went down 90% last cycle, which was extremely brutal. I mean, that's just crazy. You put 10 BTC in to ETH, you at the top, of course, you'd have to buy the top, but you'd have one BTC left, right? So it was a crazy drawdown there. Whereas the max drawdown that happened from peak to bottom this cycle was 40%, and it's only 28-ish% right now. So really the burn and staking and all the other fundamentals that have come to Ethereum have really basically acted as a floor in the bear market. Now, I always say to people, what do you think happens in a bull market where supply is basically, most of it is staked? Well, not most of the supply, but a lot of it is staked, and there's so much burn going on. There's all these other reasons for holding ETH. So I think that people tend to look at the short, medium-term stuff and forget the bigger picture, the bigger long-term picture when looking at performance. But yeah, the staking ecosystem is just so healthy right now.
Yeah, no, I see that all the time, actually. Kind of what you're saying. People be like, oh, we got fee burn and staking, and there's 20 million ETH stake, but ETH's only at like 1860 still. And that's not, like you said, that's not the way to look at it. What would it be if that wasn't? I mean, we might be
Hmm.
down at 1100, 1200, right? And it's kind of amazing that we only on the ratio retraced 40%. I actually didn't know the exact amount. I thought it was a little bit higher than that. But yeah, that's amazing looking back to like last like what,
And
90,
I think it
right? So
only went that low because of the 3AC blow up where they were puking all of that ETH onto the market.
dumping
And
on.
it, exactly, it only lasted for a little bit. Actually, right after that, it just went right back up. So yeah.
Yeah, it's pretty much been stable. Yeah, no, I mean, I definitely think that's the way to look at it. Not like, oh, why isn't ETH at 10K? Because and that'll happen in a bull market too, right? We'll see better performance for ETH in a bull because there's less supply to sell. There's more ETH locked up. I mean, locked up's maybe not the right term, but I mean, we got used to that with like locked in DeFi, right? But in reality, like it's not locked. But yeah, kind of going back to that topic. I mean, I think we're at 22 million ETH staked. Seems like we'll be probably on our way to 30 pretty soon with all the pending validators. And it kind of blows me away. I mean, if back in the day, I thought maybe 10 to 20 million would be staked, something like that. Because at a point, like the risk reward factor isn't quite there. Like there's not that much risk. I think there's more risk though than people kind of realize, right? Like just making sure your machine stays up. If there was like a major client bug and like a majority of people were using that client, or you do some things wrong, or maybe there's just a bug in general in staking and everyone kind of gets screwed, right? Like there are still, we've been running less than a year on this, right? Well, going back to phase zero, we've been running like 4 years now, something like that, 3, 4 years. But the actual like my withdrawals and all that recently hasn't been that long, and the merge. So there definitely is some. That's my favorite, by the way, on Bitcoin maxis. They're like back in the day, well, the rich get richer. There's no risk in staking. And then the other day, like Vitalik on, I think on Bankless was like, oh yeah, I don't know if I would be staking all my because there's some risk. And then the Bitcoin max is like, see, Vitalik says risk. So it's like, which one is it? You can't have
Yeah,
both of
yeah.
those things. I
It's
just love
Schrodinger's
that.
FUD, right?
Yeah,
They love their
exactly. Yeah.
Schrodinger's FUD.
100%. But yeah, I'm curious to see where we're going. I mean, I think as a solo staker, I would love for people to stop staking because my yield keeps going down and my blocks keep going down every day. But I think I'm just creeping under 5% now with MEV boost on as a solo staker. So I'm guessing that's trending probably towards 4 soon. Now, in a bull market, it'll get wild, right? Because fees will be up and you could get a block. I mean, I've got a few big blocks, but I'm sure people are going to be getting 20, 30 blocks like daily, right? I mean, that even kind of happens now, but like when things heat up a little bit, but I think it's going to be pretty constant for stakers. And ETH's going up. So, your previously earned stuff's going up. So, yeah, where does it end? I don't know. Maybe we get up to like 50 million or something. I think this will be a strong narrative for Ethereum once retail kind of comes back. Because I think it's a little misleading to say, oh, the ETH's locked in staking. But in a way, like if you're staking your ETH, I think most people are not, and you see it in the exit queues, not many people are like lining up to go rush out in a bull market to unstake, right? I think in a way more than DeFi, staked ETH is much stickier as a
Mhm.
stuck money than like value locked in DeFi was.
Yeah, I agree with that. And I think that kind of snowball effect you were alluding to in a bull market where essentially the APR or APY goes up because there's more fees being paid, there's more MEV, which means that there's going to be more ETH staked, which feeds into the narratives of, oh, look, more ETH is being locked up. Even though it's not accurate to kind of say that, I guess, especially with LSTs, it's still going to be a narrative that people play on and it's going to snowball. And then you just keep getting, so what ends up happening is that the APR goes up, more ETH gets staked, and then more people buy ETH to stake it. And then maybe the ETH price keeps going up, right? And then the USD denominated returns keep going up because, as you said, you earn it in ETH, but then you measure that ETH against US dollars. So it could lend itself to a pretty extreme flywheel effect, right? Where essentially you have, as you said, like sticky ETH stake sitting there, and then more ETH stake coming in, and then that's not even talking about things like restaking, right? Like eigenlayer or even like leverage staking, where you can essentially just like do the recursive staking via these money markets and stuff like that. Obviously, that's a lot more risk you're taking on doing that. But in a bull market, I think people remove the risk part of their brain a lot of the time because everyone's making so much money because everything's going up. You're not thinking about risk. You're not thinking about things going wrong. Like in 2021, no one was really thinking about what would happen in a bear market. And in 2022, like so much happened in that year that was just out of the kind of, I guess, mind for so many people. Like no one predicted that Terra would collapse in 3 days. There were obviously lots of concerns around Terra and how it looked like a Ponzi. Well, the UST stablecoin looked like a Ponzi, and that played out. Pretty much no one knew what FTX was up to. We knew that SBF was dodgy and FTX seemed dodgy, but I don't think anyone had any idea that he was doing what he was doing with customer funds, right? Like that was next level. And then all the other kind of daisy chain leverage that blew up. So in a bull market next time, you'll see the same thing happening. Everyone will be like, oh, it's a super cycle. We're not going to get another bear market again. And that's why people remove the kind of risk part of their brain. I mean, maybe not the people that have been around for a while. I know you and I definitely think differently about this because we've been around for a long time now. But the newer people, even the people that were around last cycle, may forget these lessons here. And that bringing it back to ETH staking, that might result in just a crazy amount of kind of risk that people take on for their ETH stake. Now, does that mean that it's going to harm Ethereum as a network or Ethereum as a chain if something goes wrong? I don't think so. I think that Ethereum, the Ethereum network has really great mechanisms in place to control that. Like the exit entry queue is a perfect one because people say, oh, what if there's a mass slashing event on Eigenlayer and then all this ETH has to be withdrawn from the beacon chain? It's like, well, yeah, it'll get withdrawn. But the thing is that it can't get withdrawn faster than the exit queue. There is a limit. So what ends up happening is that the secondary market prices in all of this risk. So the LSTs will maybe trade at a discount because everyone's trying to get out, right? Or the services are trying to sell what they have in order to cover their losses or anything like that. So there's a lot of moving parts here. But in a bull market, I think it distorts things because there'll be so much demand, there'll be so much money flowing around that what will end up happening is that people will not, I guess, do a risk reward kind of analysis properly, and we'll get some crazy stuff going on. But yeah, it's hard to know where ETH staking will actually go to. As you said, like, will it go to 50 million, 60 million ETH stake, 70 million? I think it's going to be generally lower than the other networks out there because ETH is used for so much more than a staking asset. LSTs do change this a bit, and so does restaking. But at the end of the day, ETH is still going to be required to pay for gas fees. So even if all the ETH is staked and doing other things and doing like LSTs and restaking, there still needs to be a part of, still needs to be some ETH to pay for the gas fees, right? Like you can't pay gas fees in LSTs ultimately. I mean, people say, oh, you can abstract it away. People can pay in whatever token they want. But the ultimate settlement token for paying fees on Ethereum is ETH, and you can't get around that. That is literally baked into the protocol via EIP 1559. You have to pay that base fee in ETH. So that also plays, I think, a big part into it for a lot of people.
Yeah, definitely. I mean, and on the topic of LSTs, I saw a tweet earlier today about, and this is like a fascinating topic and could be a huge narrative for DeFi someday. Maybe not this cycle, but maybe the cycle after, as people kind of start to learn about this stuff. A lot of DeFi collateral is being replaced by LSTs and not ETH, right? So like Coinbase V3, for example, or not Coinbase, Compound V3, for example, you can lend your Lido wrapped ETH as collateral and borrow against that. I mean, how cool is that? You're earning 4 to 5% on your collateral as your borrow. So you can go lend, or you post your collateral, you're earning 4 to 5% on it. You can go borrow, say USDC, and I think the borrow rate's only like 3 or 4% or something like that. So you're kind of like, of course, they're different assets, and there's a mismatch there, but it's such a cool, unique thing. Like, it's not a very common thing in traditional finance to be able to have a collateral that's earning you interest, beneath the scenes, right? And like, say you're borrowing a position and ETH goes up, you're earning all this interest plus the value of ETH going up. So I kind of expect almost all, like, I don't really know why you wouldn't like wrap your ETH if you were using ETH as collateral and DeFi on borrow against it, right? So I think that's going to be a big push as well. And another reason we're seeing, a lot of staking, like if you are someone that's wanting to borrow against your ETH, you're going to go stake it, earn on it, and then borrow against it, right? So that'll be a big kind of interesting narrative. I think really something that's just unique to Ethereum, another like cool, like new financial component that's, not necessarily invented on Ethereum, but just only possible on Ethereum. And ETH truly is like one of the most unique assets in the entire world now, right? Like given all these kind of things we're talking about. And, on that, it's funny, the Jin Spartan has like this 3-year DeFi bear market meme, which is expiring like any day now. I think it's like up, right? He always says it's like a little ticker.
Yeah, I think it's like August or September, basically, when it's
so we're
up.
close.
Yeah.
Yeah. So what's funny is like just like that these cycles do line up with stuff like this, right? And like memes and self-fulfilling prophecies do play a role. And like we're starting to see some DeFi coins move up. I took a few DeFi positions for the first time in many years. At
Mm,
this point, it seems like many decades. And like that, a small portion of my portfolio, like very small, but wanted to play because I there are some graphs there I think that looked a little primed to do well against ETH. And but it's funny, like if DeFi does start taking off in its own little bull market, like right at the end of this 3-year bear meme, like it would be so fitting for crypto. But I think we're going to see a comeback of DeFi. Like the original DeFi bull was propelled in a way propped up by farming, which wasn't sustainable, right? These protocols were just essentially printing off tokens, trying to attract liquidity. And now it's more about the quality of the protocol, what features they offer. And it's pretty basic now because everything's kind of like settled in. The code's been verified a lot more. Like it was like the wild, wild west back then, right? I think we definitely could see a proliferation of DeFi again, and just like that usage going up, and kind of see a second little DeFi hype bubble. Like I'm more confident, of course, in ETH going up. Like I don't want to sit here and say, oh, comp's going to go up 10x in the next. Like I don't know, right? But I do think DeFi is getting to the end of that like bear cycle, and how the coins themselves, like, I'm not a fan of, like, I call them worthless governance tokens, but it almost doesn't matter, right? Like people, retail, everybody just sees them as like ownership. And like, if DeFi takes off just because like comp or uni have not much use other than governance, they're still going to go up, right? Like people don't, it's really, you're mid curving yourself, right? If you're thinking too hard about, oh, this token doesn't really have a use, even though like DeFi might go through a bull market. But that's a sector I'm always interested in, of course, but I kind of have a new eye on.
hmm Yeah, and I think the probably quintessential example of this is MKR, right? It's one of those tokens that has been beaten down for a very long time for various different reasons, even though Maker as a protocol has been growing. I know that I put this tweet out the other day. The purists among us, like the ETH OGs, were really disappointed with Maker over the past couple of years because it kind of shifted away from that vision of a truly decentralized stablecoin to being basically the bridge between the old world and the new world. Really integrating the real world assets, starting with things like USDC, but now doing other things like treasuries and stuff like that. I think that's the right path for them to take, and I think that they're one of the only protocols actually making real money as well. As you said, like these things are governance tokens, but they also have the ability to capture some sort of dividend eventually. And it just depends, because with MKR in particular, I actually saw some proposals put out there that I think they want to turn it into like a staking token, and they also want to do a split on it, like a 1,000 split or something, where essentially I think it's what $1,300 right now, so it would be like a 1 cent or something, 1.3 cents, which would be pretty crazy because we all know how unit
Smart.
bias. Yeah,
I want to do that for ETH, but I would never get through. But it's
yeah,
smart.
yeah. Sadly not, but yeah. So there's a lot of that going on. But I guess those are like the OG DeFi protocols, right? The ones that have been proven, tested, the ones that would be more interesting to the traditional finance world because they're more interested in things that are low risk, right? And things that have been around and tried and tested and have not just died off. But there's also a resurgence, I think, in newer DeFi protocols over the past 6 or even 12 months that aren't just kind of modifying things a little bit, but trying to do radically different approaches to DeFi. So one of the themes is like Oracle-less protocols. So there's one that came out recently called Ajna Finance that is trying to do Oracle-less money markets, which is pretty ambitious, right? There is a new AMM that I know of. They're trying to do like radically different AMM design, like just very different to Uniswap, not just trying to fork Uniswap and add a few bells and whistles. There are other things like LST-centric borrowing protocols, like Gravatar protocol. So you basically put your LST, and it's like Liquidity but for LSTs, and you mint this GRI stablecoin against it. So there are a lot of things happening, and it actually feels like a real DeFi 2.0 instead of what we had, which was just Ponzi's. With the original thing that was called DeFi 2.0. So I think DeFi, as you said, like is in a really great place right now. It seems to be coming out of its deep bear market. Not just the tokens, but I think generally people got bored of DeFi for a bit because NFTs kind of became the thing, and then L1s as well. The L2 hype is pretty big right now too, but I think DeFi also plays into that because a lot of these DeFi apps, they work a lot better on an L2 because it's more scalable and faster, and there's more there's a bigger design space there. So yeah, I'm definitely paying attention. I haven't taken any DeFi positions besides some angel investments, to be honest. I kind of look at MKR and I'm like, I've been burnt too many times on that token. I kind of want to buy because it feels different this time, but at the same time, I measure everything against ETH, and I'm like, realistically, how much is it going to go up against ETH? Right? Am I going to make a 10x against ETH, for example? I don't think so. Maybe I'm wrong, but yeah, that's how I kind of look at things.
Yeah, same, and that's the hard thing. Like usually, I just hold on to my ETH, right? Because like you have to look at it against ETH, right? Because I mean,
Hmm.
most of the stuff if I'm investing, I'm taking it likely out of my ETH stash. But yeah, no, it's a very good point too on like newer experimentation in DeFi. I definitely think we'll see that. Like for example, Uniswap, of course, like V1 of their AMM wasn't the end all be all, right? They're already on like V4 and they've got Uniswap X, and like there's big improvements that could be made to AMMs, like huge improvements. We still have the issue with like low liquidity and people aping in, getting sandwich attacked. Like there's so many things, like the inefficiency of like V2. They tried to solve in V3, but V3 is not really great for unless you're like a crazy sophisticated LP, like kind of running bots. So there's a lot of improvement that can happen. Even things like like cow swap, and a lot of improvements have happened to help people get better prices and not get front run and all of that stuff. So I do think we'll see a lot of that happen. One of the cool things I saw the other day was Curve launched their stable coin, Curve USD, and they have like a pretty cool mechanism on liquidation. So I think even things like that people thought would just be how they are, like, oh, so Curve, for example, you can set like a band of liquidation. So on like say Maker, you borrow against your ETH, it'll say, oh, your liquidation price is like 1,000 ETH or whatever, $1,000, and it'll just like liquidate you there. On Curve, you can like set these bands, and it'll slowly liquidate you across these bands, right? So your collateral, and if it goes back up, ETH goes back up, it'll rebuy for you. So if it kind of goes back and forth in those bands, you could get wrecked on like slippage and stuff like that. But it's cool because there's not just like one price where you get liquidated. You could hang on, and then if ETH goes back up. So, it's just stuff like that, improvements upon. And again, those are things kind of only possible on Ethereum, right? Like, of course, in the traditional world, you could get like liquidated on collateral in your account, but they can't like programmatically do these bands of liquidation and rebuy for you. Like that stuff doesn't exist. It's literally only possible with smart contracts. So, yeah, you mentioned like layer twos. One of the funniest narratives, you and I have kind of been saying this for a while. I had a tweet I retweeted about Polkadot 3 years ago. And I said they'll come crawling back to Ethereum in 5 years. So there's 2 more years left there. But we're slowly seeing chains that we would call them quote unquote alt layer ones, starting to crawl back to Ethereum and say, actually, we're going to go the layer two route and use Ethereum as our layer one. What do you think about that? You think that's going to be, well, I guess first I'll ask, do you think the alt layer one wars are done, or will we see that another cycle? Are they all going to just kind of come crying back as layer twos and rebranding and going that route? Or kind of how do you see that all playing out this cycle?
Hmm. Yeah, so it is a kind of relatively new trend that we've seen play out, and it's something, as you said, we've spoken about for years, that these these L1s would transition to L2. We saw Cello do it recently, and they've been around for quite a while. They're not just a new L1; they've been around for a long time. I remember watching a presentation from them in 2019 at DAppCon. So they've been around for ages, right? But then you
We
also
actually
have,
had their founder on the podcast forever ago, probably
yeah.
around 2019. Yeah.
Yeah, yeah. So it's not just like a recent kind of phenomenon. It's a pretty long-term thing. Palm Network, which is this NFT like layer one that Consensus launched at the time. I remember when they launched that, I'm like, why isn't this a layer two? So they've done that. And I think there are a few others in the works as well that I've kind of heard rumblings about wanting to transition. But I think when you look at the kind of L1 space as a whole, you can kind of split them up into different things, right? There are the L1s that really should never have kind of been created as an L1 to begin with. They just make much more sense as an L2. And these are things like the EVM compatible L1s, right? They just make zero sense as an L1. But in saying that, at the time, the infrastructure was not there for them to spin it up. It's only recently that we've gotten things like OP Stack, for example, where people can easily spin up an L2, that people are now doing that. So I don't necessarily blame people for building these things if they wanted to build something that was more, I guess, like better than or more scalable than Ethereum, because side chains were accepted as a Ethereum scaling solution for quite a while there, probably till like at least 2019 before we changed, because we started getting some roll up stuff happening. I remember Optimism in 2019 started making noise about roll ups as a successor to Plasma. So there was a different kind of like narrative back then. But yeah, the last couple of years it has shifted squarely into roll ups, right? And now that it's really easy for anyone to deploy their own roll up, you see these chains that have pretty much been failures as L1s, to be honest. They haven't really gotten much traction, saying, okay, well, we're going to transition to a layer two for various different reasons. And one of those reasons is to tap into the Ethereum ecosystem, obviously, to tap into all of that activity, all that money there. It doesn't necessarily mean that they're going to succeed at that. There's going to be plenty of L2s that fail to get any traction, just like there's been plenty of L1s that have failed to get traction. But I do like the trend. In saying all of that, the L1 was not over in terms of the, I guess, like fact that there are people out there who just don't like Ethereum or the L2s, right? They just don't think that the Ethereum roadmap or the rollup centric roadmap or the Ethereum design is the way to design and scale a blockchain, which is fair. I mean, you can have differences in opinions. That's totally fine. And I think the biggest communities around this, ironically enough, you mentioned Polkadot. I think they're one of the biggest around this as well. I think that they have a very specific vision of what they want an L1 to be, and they're building towards that. So I don't know if we'd see them kind of come over as an L2. It just wouldn't make much sense for what they're trying to do. Same with Solana, for example. I feel like, they're always going on about being able to do transactions at the speed of light and being able to replicate the database across the world. But if you want to do that, like, you have to do that as an L1. It's not really going to translate very well to an L2. You could bring the Solana kind of, SVM, Solana virtual machine, over to Ethereum and as an L2, and create an L2 around that and use the Solana execution environment as an L2. But as a network itself, I think, Solana can't really transition to an L2, and Cosmos as well. Same thing. It's kind of funny with Cosmos though, where they had this vision of like app chains, right? Like app chains building it and then being connected by the Cosmos hub. And I think the vision was correct. The implementation was wrong, because what they tried to do was have all these chains be sovereign. And essentially what that would mean is that you would have to secure them by the token that was issued by the chain itself, by the project itself. And then you could optionally connect to the Cosmos hub in order to do bridging and things like that. Whereas with L2s, you don't have that, right? You can have your own token, but you basically just go settle to Ethereum, and it's not really a choice. You have to settle to Ethereum. I mean, you can choose to settle your data on there or on another kind of data availability solution, but to be a roll-up, for example, you settle everything to Ethereum layer one, and that becomes your bridging infrastructure, and you tap into all the money and everything like that. So yeah, there are differences in the L1s, but all of the EVM compatible ones, or at least most of them, I expect them to either lose market share to the L2s or to transition themselves. And I would really love to see like BSC transition, right? Or even like Tron transition, for example, because both of these things actually, funny enough, do have a lot of usage. BSC does. I mean, it's more of a casino chain, but I guess that, I don't have a problem with that. I mean, a lot of crypto is speculative, and that's something that people do on Binance anyway, so it's just an extension of that. Whereas Tron actually has a lot of stablecoin activity on it because of the cheaper fees. So if they just transition to a layer two, it would work the same way, if not better. Now, last thing I'll say on this is that I think what's going to cause the transitions to accelerate is if the native tokens of these projects start performing better once they transition to a layer two. Because at the end of the day, it's all about financial incentives. So if people see, if these other projects see, wow, okay, being an L2 is actually good for our token, their community is going to start telling them, hey, transition to a layer two. And then eventually I think that a lot of them are going to do it just for that. And not even consider all the other benefits of doing it, just for that financial benefit. So yeah, but generally the L1 wars, and amongst those L1s that I mentioned, definitely not over. And I think that it's over in the sense that I think Ethereum won, but it's not over in the sense of these things are still going to be around. And I don't think they're going to transition to an L2.
Yeah, I definitely agree with that. And like, I think we'll see a little bit. Of course, the last cycle a lot was, hey, we're an Ethereum competitor, come buy our token, and shit went crazy, right? And that was like the narrative for non-Ethereum chains. There'll be a little bit of that this cycle still. I don't think as much as we saw in the past, but I agree. Like some of those chains will always exist as layer ones, and we'll always have those quote unquote wars kind of going on of which stack is better. What we'll definitely see, I mean, this cycle 100% is going to be the layer two cycle, right? From from the hype of people buying the tokens of the layer twos to teams saying, hey, look, we're a layer two, come buy our token. Which, so I agree with you. There'll be pressure from, token holders or the governance of these chains or the teams that are running them to kind of do that transition. But in reality, like once stuff takes off, like we're finally in a pretty good position to say, hey, look, Ethereum is scaling, go pick your favorite layer two, right? And like the only thing this cycle is we're not fully there yet from like a decentralization aspect or from a truly risk-free aspect of these layer twos. And I'll give a shout out to Layer2Beat, L2beat.com. They do a great job at it's kind of like DeFi Pulse was. I almost said DeFi Pulse back in the day. I think DeFi Pulse still exists, but I haven't heard anybody
It is, but
since.
they changed to like just being a message board. I think it got sold. So
Really?
it's
Interesting.
yeah. DeFi Llama is kind of like the replacement of DeFi Pulse these days.
Okay. Yeah. I hadn't been there for a while. I haven't heard it mentioned. So it's a lot like that where it shows you the value, but they do a great job at like educating, kind of like risks. They have like 5, I think, like highlighted risk and like what each layer two has done and like where the risks are. So and there's a lot to do on like the technology side of improving that for layer twos, right? But at least we can say like, hey, the main chain's full. You can go over to Arbitrum, Optimism, whatever. I mean, gosh, you go on layer 2Beat now. I think there's like 35 on there or something like that. And we can push people there, and they can do probably like lower transaction cost things. Like remember back in the DeFi days, if you were doing like a $200 trade, the fee was like $50 to trade on Uniswap. So you're down 25% on your trade. Now, one of the interesting things, maybe we just won't see the big push until, people come in and fees really start going off on layer ones. But we've seen this like weird, like micro cap stuff, meme coins over the last couple months, people chasing like, sub $1 million like micro cap coins and like the rise of like Dex Screener and people just launching literal meme coins. I mean, one of them that's gone to like hundreds of millions is like Sonic Harry Potter 10 Inu or whatever it is. Like it makes no sense, but I mean, that's why I love crypto, right? I mean, it does make sense because it's just a stupid meme that took off. But we're still seeing all of that happen on the layer one side. And I'll go look and like people are making like $100 trades, losing $10, $5-10 on transaction fees. And I'm a little amazed that stuff hasn't really moved over yet. But I'm guessing it's because right now it's more the crypto native people like probably have bigger stacks and they're just chasing stuff. They don't really care about the fees. Once like retail comes in with only a couple $100 to play with and they want to jump into meme coin for, $10-15, then they're going to want to be on layer two. But you still kind of have this fragmented liquidity, right? Interestingly enough, this microcap stuff has all been happening on Uniswap V2. That's where a lot of the liquidity has been. But it's tough. Like when the teams launch or whatever, they put their liquidity on main Ethereum layer one, Uniswap V2. If you want to go trade on Arbitrum or Optimism or whatever on Uniswap, that the liquidity is not there, right? So everyone kind of like stays housed where the original liquidity was launched. So hopefully we see that transition, and a lot of activity is happening over on Arbitrum, of course, and Optimism and ZK Sync and all of these. I think total value locked in layer twos surpassed 10 billion just the other day. So like we're getting there, right? But I don't think we'll see the true effects of like how awesome it is going to be to have scaling until stuff starts popping off and new users coming in and gas is, 200 Gwei daily.
Mm-hmm. Yeah, I think one thing that a lot of people seem to miss, and it's not just like people on L2s or L1s, it's just generally in this ecosystem, is that the money is where the activity flows to, right? Like, and big money does not care about fees, right? They are fee insensitive, really. I mean, there are different types of big money. There's obviously the ones that do a lot of transactions, and obviously they're going to be a bit more sensitive to fees than others. But if you've got tens of millions of dollars on layer one and you're doing a transaction, every other day or a few transactions every other day, like you're not going to care about even paying thousands of dollars in gas fees because most likely you're making more in profits than you are in paying those kind of gas fees. And it's just a business expense at the end of the day for a lot of these kind of people. If you have that much money, you probably registered as a business, and you can claim against that, to claim the fees against that. So liquidity rules everything, as you mentioned, right? There's liquidity for these things on L1. There's always the network effect there. And to move that across to L2s is, maybe not as difficult as moving it across to other L1s, but it's still difficult and it's still going to take time and it's still going to take kind of that incentive to go to these L2s. I think one big push that's going to happen is when base launches, and that's actually happening in the next week. Apparently, they said early August, so it's already live for developers, but it'll be live for users. And I think Coinbase is obviously going to push a lot of activity there, a lot of people there, and they're going to make sure that there's liquidity there as well. I'm sure they've got partnerships with different people out there. So that's going to push things there. And the interoperability stuff as well is coming along nicely. There is obviously a lot of bridges and they have their own different risks and things, but there are other ways of doing interoperability and sharing liquidity. But yeah, as you said, there needs to be that big push, that big incentive there. And at the end of the day, the gas fees are that push. I think that what we could potentially see this time around is that instead of people leaving Ethereum L1 and going to these other L1s, just bridging across, especially the EVM compatible ones, they just go to the L2s instead, right? Especially post EIP 4844, where for those who don't know, not only does it reduce the fees of rollups, it also separates the rollup fee market from the normal L1 fee market. So if gas fees spike normally on L1, it does not affect the L2s because the blob transactions, which they'll be storing their data in, is different to the rest of the L1. So essentially your fees will be maintained at that low point on these L2s, regardless of what L1 is doing, which obviously is awesome, right? It's awesome because there's not going to be that spike where it goes to like 200 Gwei and the L2s also go up because they're sharing the same fee market, which I think is very smart. That's something that I actually, it's been talked about for a while. It was called multi-dimensional EIP 1559, which was splitting out the different kind of fee markets for different transaction types. I think that Solana actually has something like that implemented on their network where essentially they have those split up fee markets. And it's a really good idea. But the way for Ethereum, the way it works is that like Ethereum layer 1 is not being scaled for end users anymore. It's being scaled for layer 2s. And that's why we're splitting out that fee market there. So once all that comes together, I do think that we can see some pretty incredible adoption of L2 up next year potentially as the market heats up. So yeah, I'm very much looking forward to all that.
Yeah, I think what you just said is a very important point that people need to understand more is we're no longer scaling, like you said, Ethereum layer 1 for users. We're scaling it for layer 2 where the users will go, right? Eventually the layer 1 will just be the settlement layer for large transactions for layer 2s, or just whales that just don't care or making huge trades or huge DeFi moves or whatever. But yeah, I mean, it's happening. It's coming. One of the best things you mentioned Coinbase is Coinbase being open to these layer 2s. Like the other day, I had some funds on Arbitrum. I wanted to move to the main layer. I just use Coinbase, just sent them over to my wallet on Coinbase, straight off to layer 1. And like, yeah, I could use a bridge. You could wait, but it was quicker. Just Coinbase has the support. They've got the pooled ETH. They don't really care where users are moving it. So just having that, even as a power user was nice. But as a retail user coming on, maybe hasn't used it much and doesn't want to go deal with bridge transactions and stuff, Coinbase makes it easy to just kind of like on and off to these different layer 2s. And I'm excited to see the launch of Base. And I mean, the price narratives will be about layer 2, but like for those of us that have been around for a while, it'll be way better just to see this stuff actually like working, right? And scaling Ethereum, and finally not have the endless annoying Twitter comments of how is Ethereum ever going to be used worldwide if trade fees are $50? I mean, if I had $1 for every time I'd got one of those last cycle, my Lord. But yeah, exciting times ahead as always.
Yeah, definitely. And I think the rest of the year will probably be more of the same, I guess, generally for everything we've talked about. But yeah, next year definitely feels like it's shaping up to be a really positive year. But I think by the next time we do another episode, Base should be live for everyone. So that'll be cool to talk about. But yeah, I think that's going to be it for today's episode. I think we covered everything we wanted to cover. So I hope everyone enjoyed it as usual. We should be back in 2 weeks from now, not 4 weeks again. But yeah, we didn't rug this time. This is the third episode where we've maintained the cadence here, which is nice.
Good. The devs are back. The devs are cooking.
Yeah, the devs are cooking. That's it. All right. Well, yeah, everyone, please like and subscribe to the channel there if you haven't already, and we'll be back in a couple of weeks. Thanks, everyone.